My name is John Calverley. I'm Chief Economist at Tricio Investment Advisors. We advise professional investors on economic trends and market directions. What I'm going to talk about today is trying to compare the US and UK economies. It's quite interesting because there are some distinct similarities, but also some major differences. I want to highlight those in the next 10 minutes or so. But first of all, I'd like to emphasize how different the economic growth pattern has been in the last few years. The UK economy recovered from COVID, as did the US economy, but the US has done much better in the last 3 or 4 years. And now US GDP is about 8 or 9% ahead of where it was pre-COVID, whereas the British economy is barely 2% ahead. So a major gap has opened up there. Now, what's caused that gap? Well, there's a number of reasons why the UK is underperforming. One is that the energy shock from the Ukraine war was much bigger in the UK. UK relies far more on natural gas, and of course natural gas prices in Europe went up a lot. So the UK actually was one of the worst affected in Europe, behind only Germany, really, because natural gas is used both for heating and electricity to a substantial extent. So that shock really impacted on consumers' real incomes, as well as driving inflation higher. Then, of course, we had Brexit in the background. It took effect in 2021. And we know that the effect of Brexit was to lower the pound, and I'll talk about that a bit later on. We also know that the effect of Brexit was to lower investment. At least we think we do. We can't be sure because we don't know exactly what would have happened otherwise. But when we compare investment trends in the UK with the US, or even with Germany, we find that the referendum in the UK suddenly impacted on investment in the UK. And if you have lower investment, you're going to have lower growth. Another issue in the UK has been a weak labour force growth since COVID. And that seems to be due partly to Brexit itself, which meant that East Europeans went back to Eastern Europe. But also because of COVID, we seem to have fewer people in the labour force. And that may be due to delays in the national health, it may be due to long COVID, it may be due to people deciding to retire early, but we're not sure. The effects in the US seem to be less, and again, we're not exactly sure why. But nevertheless, it does mean that whereas the labour force in the US is up significantly from pre-COVID, in the UK that's not true. There's barely any increase in total employment since pre-COVID. The US also had a larger fiscal stimulus. President Trump did a lot of fiscal stimulus, but then President Biden continued with that. Whereas in the UK, we turned to fiscal austerity much earlier. And then I want to talk a little bit about consumer behavior, because we can see that there's been a big difference in the way consumers have behaved. The UK savings rate, of course, went up during COVID, as in the US, and that's because people couldn't spend or couldn't get out to spend. But then the savings rate came back down, but stayed relatively high. So what that means is people had the income, but they weren't spending. In contrast, in the US, the savings rate came down below where it was pre-COVID and has stayed low. And that's helped to drive consumer spending in the US in contrast to the UK. Now, one of the reasons that's happened in the US is that people did accumulate a ton of savings during COVID, accumulated savings we call them, and they've been gradually spending that down, and that's helped to keep spending higher. In the UK, it seems that accumulation of savings was actually simply invested into stocks and shares and has not been spent. So very different behavior by consumers. Now, it might reflect a different attitude, more confidence in the US, perhaps because of the fiscal stimulus, perhaps because they didn't have Brexit, perhaps because the economy was stronger, stocks stronger. We don't really know, but very different behavior by consumers. So another factor to look at in thinking about growth is productivity trends in the US and the UK. And what we've seen over the long run is that UK productivity did very well in the 70s, 80s, and 90s, catching up with the US. This is looking at productivity output per hour. And then around the turn of the century, the UK hasn't done as well. And since about 2008, it's done very poorly. And productivity growth has been very weak compared with the US. So another factor is that during recessions, the UK seems to underperform compared with the US. What seems to happen is that when you get a recession, the US sees a big shakeout of labor and firms close and then new firms open, and that leads to a rise in productivity. Whereas in the UK, you don't have the same effect. And that was particularly amplified during COVID, where I think it's clear now that the furlough system that the UK and Europe used was actually very inefficient. It meant that people came back to the same jobs, whereas in the US, people were made unemployed and some of them retrained, some of them came back to different jobs. Employers only rehired the workers they wanted. And that seems to have been a big driver of productivity growth in the US. I want to turn now to inflation, looking more at the short-term view and what's happening with central banks. And what's interesting is that core inflation, which is what central banks are focused on, is just about the same now in the US and UK. 3.5% in the UK, 3.4% in the US. And it's interesting because UK inflation was much higher than the US until recently, but it's come down a lot just in the last few months. But UK inflation actually peaked later than the US, but it's been coming down faster. Perhaps not too surprising if you think of the relative strengths of the economy. We know that weak economies bring inflation down faster, but that's certainly been happening. And what's the outlook there? Well, this is where there's great uncertainty at the moment. The central banks want more evidence that inflation is coming down before they cut rates. Both the Bank of England and the Fed they're clear they want to cut rates and they think they'll be able to do so, but they want a bit more data. I would say right now, looking at central banks, the Bank of England will probably move first, probably next month, whereas the US may wait a bit longer. It's going to depend on the economic data. And that actually is going in the opposite direction at the moment in the short term. The US appears to be slowing a bit, whereas the UK appears to have quite a bit of momentum coming out of the recession last year. There's a bit of a different trend on growth there. Nevertheless, I think both central banks will start to cut this year. The UK probably ahead of the US. And finally, I want to talk about the changes in the exchange rates. I like to look at the real effective exchange rate of different countries, which is really comparing the competitiveness of that country by looking at a broad range of different currencies and thinking about where the exchange rate is. And if we look over the long term, it tended to be that when the pound was stronger, the dollar was stronger and vice versa. They sort of moved up and down together against other currencies. And there was a big break in 2016 where suddenly the UK was weaker, whereas the US, of course, has been strong in recent years. And if we look simply at the dollar sterling exchange rate, there's also been a change there because prior to 2016, something like 140 was usually the floor for sterling. And since the Brexit vote, the 140 has been a ceiling for sterling. So my expectation is that the pound will pick up from these levels over time as Brexit settles down, as things work out gradually, but we'll have to see. And I would just like to make one final point about the structural issues facing the two economies, because this is one that they both share, and that's on the fiscal side. Both countries have difficult fiscal situations, and that's partly because they already have large deficits and debts. The debt ratios are around 100% of GDP in both countries, and deficits, government deficits, are quite high in the sort of 5 to 6% range, somewhat higher in the US, but still high in both countries. And there's tremendous pressures from aging, from healthcare, and also a desire to increase defense spending in both countries. So there's going to be a lot of difficult decisions to take on those. It's going to be easier for the US if it can maintain this more rapid economic growth, and it's going to be harder for the UK. And I think one of the biggest challenges for the UK going forward is how to increase that growth potential and growth performance. So if you'd like to hear more from Tricio and the activities we're involved in, please have a look at our website, which is tricio-advisors.com, advisors with an O. And you'll find on there blogs and also information on our output.